the market got much more than what they wanted in terms of an budget.
Yeah.
And the market reaction, despite the fact that institutional investors were not big sellers, that's what data is indicating, was purely because of technical factors. And the technical factors largely because Adani group of stocks, they sold off, it created a domino effect. And then HNI investors and FNO traders, they pretty much decided to throw in their towels. So there were technical factors which were at play, and the technical factors really broke the back of the market, and a great budget like what we saw yesterday was completely ignored by the market. Now I was hoping that there would be some logic and some rationality which would come back after yesterday's technical sell-off, but now we'll have to really understand and take this Adani FPO withdrawal news forward, and that in a sense will have implications on the market, at least in the short to medium term, because these group of stocks will remain volatile, and it needs to be seen that how markets essentially are able to digest this kind of a news flow.
Yeah, and it also sort of throws open a lot of questions now which are unanswered. Why was the FPA called off when it was fully subscribed? Yeah. What happens to people who've put in the money, the lenders first, and then of course, the collateral damage on the shares, if there is to be any.
So Aisha, they'd moved mountains. They'd moved mountains to take the, so that for the issue to go through, and the issue did go through, largely because of support coming from some family offices and also some, Middle East funds. Now the question is, why have they decided to return the FPO money, I beg your pardon? You can argue and say that this is in the spirit of investor interest, because the underlying price of Adani Enterprises is almost 50% lower than the FPO price. So to protect the long-term investor interest, the spirit I think is right. But since this is an equity offering, you have to understand that the purpose of the FPO, when the FPO was floated, it had a purpose that it will fuel the high growth businesses of the Adani group, which is the green hydrogen business and the airport business. And it will also help the debt reduction of the company, and it will increase the equity base and also change the debt equity ratio. Now that the FPO proceeds are going to be given back, what will happen to the capex, debt reduction plan, and the entire high growth businesses of Adani Enterprises, which in a sense are the business of the future. So the high growth, high capex which the Adani group currently is planning obviously will take a back seat, and they will have to revisit and understand that if the FPO proceeds will not kick in, the plan which in a sense, the capital structure plan which in a sense was drawn, and the capital and the growth which was coming largely because of this FPO money, what will happen to that growth? That's part one of the story. Part two of the story, the lenders. Now this is one equity issuance, so there is no bank risk here. The State Bank of India chairman yesterday told us that they have no problems. I mean, Adani exposure is not a problem for India's biggest lender, and that account is, that account interest is completely served. But from a market standpoint, since there are some dollar repayment bonds which are dollar repayment bond which is due now on some dollar bond, markets would be observing that with huge amount of curiosity as to what happens. I think from a market standpoint, if today some of the lenders they sell off, that would be a sentimental reaction. I don't think there is a problem per se for the Adani, Adani loans. But from a market curiosity, the bond repayment, which is later this month, I think would be of immediate curiosity.